Hi guys, welcome to and back to my YouTube channel. If you are a new subscriber, welcome. My name is Tumelo Faith, and if you are a returning subscriber, thank you so much for constantly coming back. So today's video, I'm going to be talking about SARS, e-filing, and everything to do with submitting your taxes. So 2020 has been different. For many of you who are usually used to going to the branch to submit your returns, this year was a bit different because you'd go there and they tell you to go do it online. So I'm going to help you guys with that, and hopefully you guys can be able to submit your returns on time. So if you had already registered for e-filing, yes, you could have, but you may not know how to proceed. But I'm here to help you guys submit your returns and submit them on time. Before I show you guys how to submit your returns, I think it's only right that I mention a few things that will guide you guys in successfully submitting, and if whether or not you have to submit your returns. So for the 2020 year of assessment, which is from the 1st of March 2019 to the 29th of February 2020, I will mention who has to and who doesn't have to submit their returns for the 2020 year of assessment. So for starters, they have what they call a threshold. So if you fall above the threshold, then you'd have to submit your return. So there are three groups: people who are younger than 65, people who are older than 65 but less than 75, and people who are older than 75. So for people who are younger than the age of 65, their threshold is 79,000 for the 2020 year of assessment. So if you earn in aggregate a gross income of less than 79,000 and you are younger than 65, then there's no need to file a return. And if you are older than 65 but younger than 75 years of age, then the threshold is 122,300. So if you earn much more than 122,300 gross income, then you'd have to submit your return. And the last and final group is if you are older than 75. So if you're older than 75 and earn a gross income of 136,750, then you would also have to file your return. So again, there's another maybe exception, or if you fall into a certain criteria, again, you don't have to file your return if you earn above 79,000, sorry, if you're younger than 65, and 122,300 if you're older than 65, and 136,750 if you are older than 75. The criteria also to not submit if you fall above those thresholds is if, number one, I'm going to list all these criteria and you need to meet all of them if you are not going to be filing. But if you miss one, then you have to file. The first one is if your total employment income or salary for the year of assessment 2020, so from the 1st of March 2019 to the 29th of February 2020, your gross income was not more than 500,000, and underline and bold italics, and very important, and you only received employment income or salary for the full year of assessment from only one employer. So you need to have worked for one person for the full 12 months, well, for the full 2020 year of assessment. And then again, and the other one is if you don't get a car allowance or a travel allowance or maybe rental income or interest income. So basically you need to only be receiving a salary, and that's it. And the other one is if you're not going to be claiming any deductions or rebates. Like deductions, they mean if you have medical aid and you're going to be claiming medical aid expenses, retirement annuity contributions, and pension funds, so donations as well, yeah, those kind kind of deductions. I will go into more details when I actually show you guys how to go about filing your return step by step. So you need to meet all these criteria. So you need to meet these 4 things. You need to earn less than 500,000 a year. You need to receive salary from one employer for the full 12 months. You need to only be earning a salary and nothing else, and you need to not be claiming any deductions of some sort, whether it be a travel allowance, medical expenses, and what else, retirement annuities and pensions. Yes. Yeah, but with regard to this, what my advice would be, even if you fall under all these do not submit criteria, I'd still advise you to submit, because even if you fall within that criteria, you could, if you file, you could be unlocking a refund. How do you unlock a refund? Unlocking a refund is if you had paid much more tax than your employer had calculated for you. So all the taxes you've been paying during the year that were being deducted from your salary every month could have been much more than what SARS calculated for you at the end of the financial year. So I'd still file my returns to avoid not losing out on a refund, and also to avoid admin penalties. Yeah, they charge admin penalties. I don't want, they're not like a lot, but you wouldn't want to be paying and being told that, you know, we are administrating your taxes, so we're going to charge you for that. And that's that. Who else needs to be filing? So another group of people who need to be filing are your provisional tax payers. I'll explain to you guys what are provisional tax payers. So before I explain what provisional tax payers are, I would like to mention that I'm not a registered tax practitioner or anything, a financial advisor or nothing. I just happen to know these things, and I thought it'd be fair to share with you guys, so you don't have to go through the stress of wondering how you're going to file your returns, given now with COVID and everything you can't go to the branch. So that's why I'm doing this video. So I was going to explain to you guys what provisional taxpayers are. Provisional taxpayers are people who earn an income other than a salary. So other than a salary, what could it be? It could be rental income, it could be investment income, interest income, rental from property, I did mention that. And from income from other trades. What do I mean by income from other trades? So income from other jobs. I don't know if I should say from other jobs, but if, for instance, let's say you work for an employer who is not registered for pay as you earn for you guys, or like as an employer who pays taxes for you guys, then you could opt to be a provisional taxpayer, so that at the end of the financial year you do not have to pay like a large lump sum because you have not been paying any taxes during the year. So if you become a provisional taxpayer, then you would be paying your taxes, I think, twice a year, and the third amount would be a top-up if you had not paid enough with the two amounts that you paid during the year. So provisional taxpayers are generally people who earn income other than a salary, because salaried people, usually their employers deduct their taxes every month, unlike if you just work for any other person and you actually do get like a large sum of money that is above the thresholds that I did mention. Then you would probably and should probably look into registering as a provisional taxpayer. So provisional taxpayers also have to file their returns, although their return might be different from from the normal salaried persons. You still submit your returns. So that's what a provisional taxpayer is. The one other thing that you should bear in mind is, when should you submit your returns? So the first deadline was the 22nd of October for manual submission. So manual submission is if you go to the SARS branch to have your returns filed for you. Well, of course, that deadline has already passed because I'm recording this video and it's going to be uploaded definitely after the 22nd of October. But the good thing is, if you are submitting online and you are a regular taxpayer, like a regular, not a provisional taxpayer, then the deadline for online submissions is the 16th of November. And if you are a provisional taxpayer and you are submitting online, then the deadline for you guys is the 29th of January 2021. So you guys still have time. So what do you need to have when you are filing your return? You will need to have your IRP5 if you are a salaried employee. Any certificates of interest from local and international interest. So what else? What you would need is any other documentation that shows that you've received any sort of other income. So if it's not reflected on your IRP5, then maybe over time and it's separately shown on a different paper or document, then you would need that. Any details of medical expenses that you've incurred during the year. Bear in mind that these medical expenses need to have been maybe expenses, for example, if it's prescribed medication by a doctor and it's not over-the-counter medicine. So if you are self-medicating, then no, unless if your medical aid paid for it. The other one is your benefit statement for a retirement annuity, provident fund, or a pension fund. The other one is if you get a travel allowance, then you would have to also have your logbook with you. What is a logbook? A logbook is a book where you keep a record of all the kilometers that you have traveled for work and for private, the fuel that you spent, the oil, motor oil, or any expenses related to your travel for business purposes. So you'd have to have your opening and your closing kilometers and all the other kilometers that you had traveled with the car for private and business purposes. The other one is any documentation for all the other allowances you'd have been getting. What are all the other allowances? Other allowances could be like subsistence allowance, which could be for like when you go have to travel for work and you have to pay for accommodation or food and catering. And what else? Okay, now I can only think of those ones. So those are the things that you would need to have with you. And then for starters, if you had not registered for eFiling, what you're going to need is you're going to need your certified ID copy, not older than 3 months of course, proof of residence, and 3 months bank statement, most recent 3 months bank statement. And that's if usually this is if you are like a newer taxpayer. But if you're an old taxpayer, well, actually that is wrong. If you are a taxpayer that does not have a complicated return. A complicated return just means you get your salary and that's it. And what else would you need? You would need, if you're registering for eFiling and you have a complicated returns, you have logbooks, you have medical aid, you have retirement funds, and then you would need the 3 things that I have mentioned. And on top of that, you would need to have your medical aid certificate with you, retirement annuity, and any interest documentation that you had received. So a certificate to show the interest and the tax part of the interest that you had earned during the financial year. So I think I touched on at least the things that I think are important to note before you file your return. And I'm gonna try and mention this again. I'm not trying, I'm actually gonna mention this again, that even if you fall within the criteria that says that you should not file your return, I advise you to file your return because you could be unlocking a refund for yourself. So you could have paid too much tax for the year than you should have, so then you'd be getting back a refund. And also to avoid being charged admin penalties. So definitely I'd still file to avoid so many years down the line being told that you owe SARS money, and you technically owe SARS money only because you didn't file. And yeah, refund, who doesn't love a refund? So definitely you guys should just file. So we are gonna get to the actual first we're gonna start with how to register for e-filing and finish that process, and after we're done with that, we are gonna submit our return together. So I hope you guys are gonna enjoy this, and I hope the tutorial, I hope that the tutorial step by step is understandable for you guys. If you do not understand, please let me know in the comments, and maybe we could get in touch. I don't know, but I'll try find a way to make this more understandable for you guys if you did not understand the video.